Sweet. All right, go for it.
Sweet, sweet. Welcome, guys. Welcome to the new people. Welcome to this is the second week now, and the topics that we ran through last week. I think more people coming in. All right. So yeah, the topics that we ran through last week was topic one: price merging, understanding buy to sell to buy, and law of time and price. So how are you guys for this first topic? Just to go over it. Like how did you find it? Good. First topic is good. Sweet. Anyone having any issues with the first topic? Too easy. Yes, Aziz. Yeah, very easy. Training your eyes to see it. Nice one. Nice one.
Yeah, my
All
whole
good. All
experience has
good.
been great. Just need to discipline myself more, so that's a me issue.
Okay. Yeah. No worries. No worries. Issue that I don't observe them all, but that's experience. Yeah. Yeah. I mean, sometimes you can't see them, but then once you go back in the evening, sit down, put your earphones on, you can start seeing the reasons why price reacted to certain regions. Those are your buy to sell, sell to buys. All right. So this week we will go over topic two. Reaction could be more autonomy in the landmark. Yes. Yeah, I mean we have a AI can run through an algo can run through these concepts. That'll be amazing, right? So yeah, topic two. What we're gonna go over today is market behavior, laws of price. So basically your Wyckoff laws and how we take away from what he has given to us and then apply it to our approach. Uh, Liquidity is your cause and effect. Contained price is your supply and demand, and price initiation is your law of effort. So let's go to the. So these are your three Wyckoff laws, as you all may know. Actually, sorry, I haven't even. Sorry, I haven't even shared my screen. Apologies, apologies. Can you see? Can you all see my screen now? Yeah.
Yes.
Apologies, apologies.
Yeah.
Sweet, 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 sweet. Okay, sweet, sweet. So this is the topic that we're gonna go over today. Um, Market behavior, laws of price. Liquidity is your cause and effect. Contained price is your supply and demand, and price initiation is your law of effort. So let's go to the three Wyckoff laws, the laws of Wyckoff. So as you all may know, coming from SMC, you should know already that these three laws were identified by Wyckoff. He was the three principles of the Wyckoff methodology. Each addresses a characteristics of nature of price. So what we can take away from here is your supply and demand is your contained price that we should all know by now. And your cause and effect is the liquidity that gets built above and below this. Liquidity always gets built, and your law of effort is your initiation, where price moves away from that contained price action. So that leaves that footprint for banks to play. And you can play at open and 50. So where open gets respected, or 50 gets respected. 50 is your most optimal entry, as you all may know. So how do they contain their price? Let's look at an example. You guys most likely know all this already. So there's many variations. Right now I picked the 2008 crash. The well, everything start crashing around that time. I picked Euro USD around this time, and this was 2008. And this is what you they call it the Black Swan event, right? Black Swan event, right? So is it really a Black Swan event if we can actually follow their footprints? Is it like you question yourself that is it really a Black Swan event? So these guys, what they tend to do is, as you all may know already, they contain their price with the activity of buying and selling. Buying and selling occurs around this with the contained price. And then once they have orders that they orders for example, for sales, they they buy up, so they had to take a loss and then they sell for profit. Now they want to break even their position, so this is what you call that mitigation, right? So once they initiate their price out, your eyes are looking at the footprints that they leave. So for example, we can see how this price here, this price here was your contained price that they have. This is a daily chart, by the way, so you can see that buy to sell. So they contain that price and then build liquidity, and then they come up to protect that order, and then follow intentions. That's what they do. These are your banks. So like who are your like what banks are actually operating these things? So let's see. So we have the JP Morgan, as you all may know, we just spoke about it. This is a 2019 overall volume. So this is 2019. All right. Now, yes, banks don't use stop loss. I don't think they do. They just mitigate, protect the orders later. They come back later. So they will have a big drawdown and then they come back. And then, I mean, these guys are moving billions. Yeah, that's why they need to mitigate to bring it. Yeah, they move the mark. Why should they need the stop loss? Yeah, so exactly. So they control price. So they have intentions to control price. So you can see how the top banks right now, JP Morgan, they have the biggest share right now. I mean, let's look at the survey right now. Well, with more than 10% market share, 10.78% increase 2019, JP Morgan. Crazy. So you guys are right now, yeah, trying to identify, trying to understand their psychology. That's what you're trying to do, like how they leave these footprints. They contain the price, move away from that price, and then they build liquidity, and then they target it. That's what they tend to do. Like you guys are against all these. So what you want to do is understand your psychology, understand the intentions. So that's how we like narrate and use logic with the three laws of Wyckoff. So coming back to that. So does everyone understand that so far with the contained price? Because we've been going over that for quite a while now. Yes. All right. Sweet. Sweet. Okay, yeah. So you guys understood that concept now. So amazing, amazing. So again, this is just going over the theory side of it, and people who haven't understood this, can be an eye opener for them, how they initiate their prices. Like you can see sometimes they sweep liquidity and come back down. There's so many variations of how they leave their footprints. Our job is to train our eyes to see how they leave their footprints. Once you know that, you can follow their footprints. Like this is the '08 crash on Euro USD, right? So with this in mind, so those are your supply zone for your cells. And then for the demand, it's just the opposite of it. So coming from the Wyckoff law, this is your supply and your demand zone, basically. But we translate this as your buy to sell and then sell to buy. That's it really. So your next law. So the cause and effect. This is a very interesting one. Like in order for price to move to a certain direction, you have to build some reason, right? You have to build a cause. Right? These guys, when they were coming up to mitigate something here, they built cause here already. You can see it. All these were just cause. All these just cause. You can see all these cause. So when they build this cause, yeah, you can see how they run. This is your effect here. They run through that with aggression through the effect. And then here too, you have the void here, run through the effect. So these are your cause and effects. And how do we personally draw this? So for me, where is my drawing tool? So for me, I draw my cause. It's like this. Like basically from wick to wick. So these are basically your price levels. Like that price here, that price here. Look at how it ran through. So these were your causes for lower prices. And then this here, let me actually draw that properly. That here, and you can join all this because these are all cause. Do you understand that so far? I'm guessing you do because this is pretty simple already. Can I get a yes in the chat box? You understood this? Sweet, sweet. So you guys are ready in advance. Ready and advance. Can I get sweet, sweet? Yeah, I mean, these are like the concepts for you to understand is there's a reason why price ran through like this. And this is 2008 crash. Like people say this is like the Black Swan event, right? But how can we see their footprints? We can follow them like that. So nice one, guys. You understand this so far. So pretty much everyone's on the same page, and it'll be easy to move on to the next topic next week. So your last laws is your law of effort. Again, majority of people would understand this already. So you can see how this had that aggression. If it was a crash, it would have left a big imbalance. Exactly. Yeah, I mean, yeah, exactly. If it was like a big sell, I mean, here they did leave quite a huge imbalance here. I mean, this is a daily, but yeah, a crash, like price can't just sell. They always balance back up because of the algos, as you all may know. So this year, you can see how the effort that came down here was pretty aggressive, and it took 2 days to come back up to protect this order here. So yeah, IPDA. I don't know what that is. What is IPDA? Yeah, what is IPDA? The algos. Okay, nice. Yeah. Oh, it's an ICT term. Okay. Okay, nice. Yeah, I just call it algos, interbank price delivery algo. Oh, okay, nice. Oh, this is ICT. Oh, okay, nice. Yeah, so you can see how they left all these footprints for you to follow, right? Possible only use lingo. Term for investor to sound fancy. I don't have any lingo for this. It's just algos. That's it. Keep it simple. There's a reason why we keep everything black and white. Just to keep it simple. That's it. Simplicity is where most is they overlook simplicity. Yeah, simple is the best, exactly. Because people like to complicate these because they think that market is crazy and market is this, market is that. But to keep it simple, that's how these guys move the price. You can see how this sweep liquidity mitigates something, transfer of money here. You can see it. And this is left unmitigated, but they bought to sell here, protected that. And then this buy to sell here, protected that. And they came back to that region. And you want to observe any flow change. So you observe a bearish flow change from a bull to bears, and then carry your continuation trades. Yeah, so yeah, that's about it. I hope well everyone's on the same page now. So if you have any questions, I'll unmute everyone just now. Yeah, if you have any questions, please throw them in. I mean, this is a very basic topic anyways.
How do you know what is liquidity? How do you know when liquidity is being generated, and how do you know it's actually a true buy to sell or sell to buy?
So liquidity is always built both sides. So right now, when it's going down, yeah, this is all liquidity for future prices. Yep. And then you can see your job is to identify all the liquidity. So once you identify that, yeah, your narrative, like what is your narrative now? What did this tap? Why did it sweep liquidity like that? And why did we break this region here? Do you not think this is a potential entry? Because now liquidity for this has been built for lower prices, right? So and then the narrative for that is needed for your quote unquote bias, like your sell bias, you know what I mean? But your job is to know where is all the liquidity, right? Yeah. So if once you know this, you can map out your idea. Do you understand? Like for example, that trade I think Sultan mentioned during the earlier live call, that was perfect. Perfect. Let's see. Let's go on 1 minute.
Will you be able to like 1 minute for this?
Yeah, give me 2 secs. Perfectly mentioned by.
Yeah, I missed that one earlier because I hopped on a phone call. I had to talk to my insurance, and I'm looking at it. I'm like watching it go. I was like, screw it. Yeah, it would have been an extra 10% today just on that one.
Oh yeah, in the chat I just saw something that I also agree with.
Yeah, because like you can see it, like if it's not like you see the second time it went up, it didn't break the higher high.
Exactly. This, I mean, in order for like, once you get a reaction from this, yeah, this order block, this constant move here, yeah, is meant to for higher prices. But what did this tap? What did we like Your narrative has to be built for you to choose that side. You understand? Like for you to like confirm this trade, yeah, like you take out that low here and then you can play this one here. Simple. You know
those are like the weak highs.
Yeah, exactly. So this year, yeah, this is an advanced play because now you know that you had aggression, yeah, intention shown. You got two lower highs, yeah. So you're expecting this because you got liquidity very close to you like that, and you know that you tap into the 4 hour region, right?
What do you do when
So
liquidity is built on both sides?
so when liquidity built on both sides, depending on the narrative, man. Normally, if it's range or whatever, yeah, we normally hedge. You know what I mean?
Oh, okay, yeah,
Yeah, that's what we do because you lose one, you win one. So for
exactly,
example,
yeah.
if you yeah, so for example, you just like okay, we see liquidity here and you want to take a long here, cool, you take that long, but make sure you take a short too. You know what I mean?
Yeah,
Yeah, that's hedging. But
you win both
hedging,
sides of the table.
yeah, hedging is you guys need to stress test this later because you need to get used to hedging because you'll find it once you get really used to it it's you find it hard to lose if you know what I mean because you
Oh, damn.
one will go through and then one will win. Sorry, one will lose, yeah, and one will win.
And hedges
But
will decrease your losses as well.
yeah, exactly. It's just
Or
portfolio
just
management.
keeping overall profit because you're playing
Yeah,
at
yeah,
both sides of the
Yeah,
market.
exactly. Yeah, exactly.
minimize losses. Exactly. So with hedging, like practice these concepts, yeah, later on, and then find again, like I said, I mean the last topic is to find your own flow. So that is a huge thing because a lot of people are some people are like conservative, some people are aggressive. Like I for me, I like to confirm my trades. I'm semi-aggressive but conservative too. You know what I mean? I mean, if I'm in the mood, I will take this one. You know what I mean? But I can take this one too. You know what I mean? So that's how I normally trade. But it's all depends on when you're in the flow, yeah, with price. You just understand every single move. That's what will happen to you once you fully understand or your whole narrative. You know what I mean? So I hope that makes sense. Yeah. Have you guys got any other questions?
I've got a few more. I just want to look at what this topic's on.
Go for it. Go for it.
Right, yeah, give me a second. All right, cool. How can you delineate that liquidity has been taken? So would you, let's say price wicks above liquidity or below liquidity, would that act as liquidity being taken, or can it be taken further, if you know what I'm trying to say? Would you wait
So are you saying that
candle? Would you wait for a candle to close under the liquidity, or would the wick be sufficient enough?
like for like this? Are you talking?
Yeah, exactly like that. Like, is liquidity truly taken there?
I mean, look at the reaction. It's like a V-shaped recovery. A wick is a V-shaped recovery.
Yeah, what is a
Do you not
V-shape? I
think?
actually don't know what that is now.
Okay. A V-shaped recovery is this wick here. If you go into the 30 seconds, yeah, you'll see how there's a buy, and then it sold pretty fast.
Mm-hmm.
Yus, can you show that also at this moment on seconds? Not everybody has seconds, that's why.
Yeah, I
Yeah.
actually don't
So
have seconds.
Thanks.
so this is on 1 minute. So because remember you need to understand that the timestamp is different too. So sometimes
Yeah.
30 seconds is like different. So let's see if it actually is. Yeah, so
Oh,
the
15
timestamp is
seconds.
different. 15 seconds.
Oh, I see what
Yeah.
you mean. Oh, yeah.
Yeah, the
That's
timestamp is
a-
different. Yeah, so you can't really, it doesn't really show you. So that's why you need to just know price, like
Yeah, I
why.
understand what you're trying to say.
Yeah.
But
So
if so a wick, you know, like not the bottom wick for the top wick. It just the first half is buy, the second half is sell, isn't it?
yeah, exactly. So let's just say this.
That's
This is a
what it
lot
is.
easier. This is a daily candle, yeah, and then you can see how today is a huge wick. Yeah.
Oh, yeah.
Yeah.
That makes sense.
So do you not think that shows a lot of intensity for the upside?
Mm-hmm.
I mean, this is on a daily time frame, but when you go down to lower time frame like this, where is it? 1 minute. What was that price action there? This sell here, yeah. Wait, this is. I'm in replay.
Yeah.
Sorry, guys. Yeah. So when you see the intensity of it bought and then it sold straight away, do you not think who can do this? And they leave a wick like this. Who can do this? Banks can do this. Do you not think you tap into that higher time frame? It showed intentions already. All you have to do is where is liquidity for my bias to be played? Right?
You see where you're marking right now, yeah? Do you see how there's mitigation to mitigation to mitigation? Where your pen is right now?
Right here.
No, on the top of that. Shall I mark it?
Yeah, go for it. Yeah, go for it.
Wait, how do I mark? View options.
Do
you see how there's mitigation here, and then mitigation here?
Yeah.
Yeah. How do I know that this isn't liquidity up here?
That is liquidity.
Okay, so what my thought process would be that it would break that liquidity and come mitigate this further, this through it, a few it.
Honestly, with this, you just have to fold once you've got the narrative itself. Yeah, you fold the money because this is where this is flow mitigation, anyways, for the next.
Yeah, that's what I'm talking about. Like flow mitigation, it looks like there's liquidity above it, but it's not. Like it won't be.
So I mean, from your previous like knowledge or experience, you probably want to see liquidity built for the FU wick, right?
Yeah.
But understand that this is a flow mitigation. Just flowing. Money is just always flowing. It's always you sell money from the high time frame. Yeah, just got tapped, transfer it into seconds. Can see that, and it always keeps flowing. You know what I mean? This some blowing here.
Yeah. So would this be flow mitigation as well? This because it came into this.
Yeah, you can see how this. I mean, did it tap into? Yeah, this all sell to. Yeah. I mean, it always.
And then it left this unmitigated area here.
Yeah, I mean, this. Yeah, I mean this. What I call it is this is a flow mitigation. Yeah, so price can come back there. You want to see can re-mitigate and see what kind of reaction you get.
Oh, re-mitigate. Okay, yeah.
Yeah, because this is pretty much re-mitigate, trying to protect the orders again, and you can see the reaction. But again, where are we within the high time frame, right? You should know. You should always want to know. But you can see how they build liquidity here.
Yeah, and they didn't build liquidity for the bottom before the mitigation, so I know. Yeah.
Exactly. Yeah. Plus, higher lows are getting created. So now, where was your last range? Sell to buy. Continue your buys here. But look at the effort here. It's pretty shit, right? It built more liquidity for low prices.
Plus, so this come down.
This is liquidity for future prices too. But your whole narrative is you wait for them to make a move, right? So
and then you join the move somehow.
Yeah, you join the move. That's it. You join the move. Okay, what is this? High time frame. When you don't have a particularly important mitigation, that in turn is liquidity create. Yeah, so all these like buy to sell to buys, they are either a reaction point or a liquidity. So that's what it is. So they in turn this here now becomes liquidity for lower prices. It reacted from, but now it built more liquidity for it to target. Was there any buy in that area after New York? I was looking, but I couldn't find one. After New York, yes.
See in that zone there, where you said where it built liquidity, like here, like see from the last time, remember, like, so you would treat that as like kind of a range. So that wick there went above that. So would you not class that? How do you know, like, when you see a wick above it, it's not just like coming into here and then going to continue higher? Like sometimes I see this and then I think it's a break and then I try and look for buys almost. because I think it's broken this like little range.
Yeah, I mean, let's look at from a flow mitigation. I mean, this is for next week. So this here, yeah, it came and it mitigate, right?
Yeah.
So same time, it built liquidity already and liquidity here. So do you not think it was fine to mitigate something probably in seconds or inefficiency? From 1 minute, it's inefficiency already. But what we mean by flow mitigation is it's always fresh. It moves away, then you come to protect. Move away, then come to protect. This is flow. You don't want to I hate personally. I don't like coming for price to come back here, and then I want to see what kind of activity. Can we see like momentum shift take out, and then I'll take this one here because I don't want. I like fresh. What we call it. I mean, we call it fresh mitigation. Like this here, yeah, should be buy to sell, continue, buy to sell, continue. It's always fresh. You know what I mean? They left that range fresh. Continue.
Yeah.
That range fresh. Continue. You understand?
Yeah. Yeah, because sometimes I wait for like the one tap and then maybe a second, or try and get in the third, and then it does this to me every time.
Yeah, because you have to understand that this is liquidity for it, for the higher prices.
Okay.
So you should not be surprised that this sweep like that. But this is fresh. This is what I mean by fresh. Moved away. Okay. Yeah.
Yeah. Makes sense.
Yeah, you always want. Look at this one, for example here. This range bar here. Let me actually get the drawing. Buy to sell, mitigate, fresh. Oof. And then you want to expect this to get protected. But what do? Run through it, build more liquidity. So ask yourself like, what's actually happening here, or what did we tap? Is this all liquidity now? You got a void here. You know what I mean? Price delivery creates structure, so it's more important to understand how price is delivered. Yeah, definitely. Yeah. Price delivery does create structure. So the way how price move, it creates these like, for us, we call it price ranges. Yeah. What are you saying, sir?
May I ask a question about momentum shift? In order to confirm a momentum shift, do you, for example, using the one in the middle, the buy to sell, the 1, 2, 3 candles came down very quickly?
Where is this?
I'm gonna annotate.
Just annotate.
For example, this is to me like this very clear like momentum shift, but then you have your mitigation here, and then to this buy to sell, mitigate, and then boom. So this is classified as your momentum shift. This leg.
For us, a momentum shift
happens at the top.
It happens at the top. So normally it sweeps liquidity, takes out the sub range low, and then mitigates this, and then after that it's just a continuation plays.
So within this area, where can I tell it's momentum shift? I can't tell. There's not anything like it. What I'm trying to say is that within this range, there's nothing really suggests to me it's gonna do this boom. It doesn't really tell me. If I'm at this point, I can't really see that coming.
Yeah, I mean here, like you had that V-shaped recovery, yeah. You see it?
So yeah.
On a higher time frame, what do you think that is? A wick, right? This is a wick to the
yeah. The buy and the sell equal. That's a wick. Yeah, in a high time frame. Yes.
Yeah. So what did it do? It tapped into and mitigate this range bar here. What are we trying to see? We're trying to see like these lows getting take out. What did it do? It took out.
Yeah.
So,
okay.
Yeah. So this is your.
Would you take the trade before the lows have been taken out?
So I would take it. This is a very experienced trade because you know that liquidity is built here.
Okay. So you know it's going to be taken out because liquidity built underneath.
Yeah, exactly. And
makes sense. Yeah.
So can I understand like the optimal trade would be this area when it's got when there's a BOS occur here, and then clearly it's broken, and then you have your buy to sell here, and then you enters at the close.
At the open of the buy.
Oh, sorry, at the open. Yeah.
That's it. Yeah, because
that's optimal entry, right?
Yeah, optimal entry. Yeah, because this is your high time frame buy, and then it broke that high time frame buy, because they bought here, and then they broke that price. Now, do you not think they and then lower highs are maintained too? Do you not think something's up here? Do you not think intentions have been shown already? Plus your 4-hour narrative from what it tapped.
Yeah. Normally in the life I draw something like this. Normally I draw when it has like equal low liquidity, I put
So normally
the way you think about it is it's not like a flat line that there is liquidity under. It can be like curved to the side.
No, I don't, Sultan, I don't mean flat. It could be like this. It could be like this. It could be like this. It could be like this and this. What I meant is liquidity sitting below in general. It doesn't have to be flat.
But like for here, like the momentum shift, like you see the price starts flattening on top. But at the same time, the market doesn't trend for days. It makes a new high and then it retraces back. And then it catches all the liquidity trap and under. Because if you see the move that was 40, 50 pips this morning, there was a lot of liquidity built all the way along. So the price like moved back about, I believe, like 20 to 25 pips to take the liquidity back, not only at the top, but also while it was trading.
Exactly.
It didn't make sense to me, but anyway, it's okay.
I mean, does that?
I've actually got one more question about liquidity.
Yeah. I mean, a basic like momentum shift is, you see, like, have you ever done like Elliott wave or anything?
Yeah.
You guys know about Elliott wave?
Yeah.
Well, you know how the third wave is the longest wave, right? And then you have the fourth wave where it retraces, and you have the fifth wave, and this is your sub range taken out.
Oh
this
yeah.
Now. A, B, tap into that, C, continue.
Yeah.
And you can play continuation. So that's the way I kind of simplify it. This is like the basic of like momentum shift. You understand?
Yeah.
Yeah, you take out that sub range because you want to continue intention. You protect this sell to buy here. But what did this tap? You know what I mean? So you have to know already. But here you always have like a rally and then a range here. Take out that liquidity. Both.
Oh, okay, yeah.
It's a common thing you see. They come up, they build a range, sweep out, take out the sub range, mitigate, and then you can play continuations from there. And then
I was actually quite confused here. I thought this was liquidity, and then that this is a buy to sell, and that price will come and mitigate over here. But it didn't happen, so I was a bit confused. Why not? So is this classed as liquidity?
Sorry. Yeah. This is liquidity as well, built for higher prices. But where were you looking at that time when price? Where was price at that time?
What do you mean? Where was it at?
Yeah, when you were looking to, were you looking at this liquidity here to target this?
No. Yeah, to target that. Yeah, to target that.
Yeah, I mean, this, you have to understand, again, the flow mitigation, man. You know what I mean? This kept flowing, yeah, but this here it stopped. What did it tap? It tapped into this range.
Oh,
here.
yeah. That's why I thought from that range you'll go to that unmitigated block.
Yeah. But look at how it delivered itself. Like this sweep liquidity in probably seconds or something. In here, there's a lot probably seconds entry that you can enter.
Yeah.
Target the low, yeah. High time for and PMs to sales would be less.
You can still get lower time frame discount and premium ranges.
Yeah, so yeah, I mean, with targets, you have to identify true high time frame. You know what I
mean? Yeah.
Yeah. So making sure that you know where you are. You're not, price is not like extended to like a week, because prices doesn't buy up straight away all the way. You know what I mean? That's just they don't do that. You know what I mean? They normally tap into unmitigated order, then come back down to mitigate this order here, sell to buy, and then if you see buying activity here, cool. Got liquidity saying here, this liquidity has been swept. Your question is, are they gonna come back down here to protect it? What are they gonna do? You know what I mean? You ask that question. You know what I mean? Is this liquidity for higher prices now? You know what I mean? So I mean, with this intensity, you should see price just continue like that. You know what I mean? But again, if we come into edge money, what do you want to see? A potential momentum shift, right? So yeah.
Where would your new ranges be there with that price action?
So with this whole thing.
Yeah, with current price action, like how? Yeah, would you just do it from? Okay.
Yeah. So with this here, you can see that sell to buy. You see the sell to buy, yeah. Yeah, sell to buy mitigated. I mean, this is a higher time frame, so you can actually zoom in further. Like what's actually happening here? Were we tapping into this? Because we got liquidity sitting right here too. You see it?
Yeah.
Yeah.
But would that make that a valid buy to sell, because it didn't really break anything? Like this is where I feel I get lost with.
I mean, it broke this sub range, right?
Okay.
Yeah, it broke this sub range. I mean, why is this liquidity built like this? I have to
For
ask.
sell to buy to be valid, does it have to break some sort of structure or some sort of range?
So a buy to sell to buy, you have to have an aggression and an intention to break. Well, you break sub range, yeah, basically.
Oh, okay. So it has to break sub range.
Yeah,
Right.
yeah. So, but
I just don't know what sub range is right now, so I can't really tell.
Yeah, I mean, a buy to sell. I mean, in itself, the range that they contain as well is a buy to sell. Do you understand? So you know how they create a range, yeah. Like this, it took out that this range here, came back down. Now looking to protect it. Yeah. So in itself, like when you see like seconds, yeah. Let's go into seconds. And seconds a mess. Yeah, you can see how, I mean, this here is a buy to sell. You can't really see how it mitigate. This seconds is very awful. This buy to sell. Yeah, so this is your activity that price initiate out, came up to protect, continue. Yeah. Yes, sell to buy to sell, initiates price in order to initiate market breaks to contain price, high or low, which is the BOS. Yes, exactly. Yeah. So any other questions? Hope you guys understood all that.
No, it seems all good. Now all I have to do is apply it to the charts, you know.
Yeah, apply it to the chart, man. That's it. Yeah. Yeah. If you have any other questions, just throw it on the bot or just put on the FAQ thing, and then we'll get back to you guys. That's about it. I hope everyone enjoy this. And yes, it's the buy to sell that leads to a beat BOS is the one that matters. Buy to sell that leads to a BOS. Yes, so I mean, yeah, exactly. So buy to sell that breaks this low here, the contained price that we had before. Now you're looking towards this. Again, this is the whole narrative that had to, yeah, your response to move. Yeah, exactly. So you have to look up this now. Again, your whole narrative this year broke that sub range here. You were looking for this sell to buy to get protected, but nope, we didn't get that. Liquidity got targeted. You can take this buy to sell here. Cool. all this liquidity got targeted. But yeah, I hope that answers it. I think questions, just shoot in the question board and the FAQ, and we'll go from there. Yeah, I hope you guys had a good evening. Yeah, let's kill it tomorrow. See what's up.
Take care, man. That was a good call, man.
No worries, man. No worries. Just let us know if you have any other questions. We'll try clear it out. You know what I mean? So let's get this.
Yeah,
let's kill it tomorrow.
Enjoy the rest of your days, yeah?
Yeah, you too, man.
You too. Thanks. Take care, brother. And by the way, if you need the call, I recorded it for you.
Yeah, no worries, man. Appreciate that.
Cool.
Appreciate
take care, bro.
Yeah.
Take care.
Thanks,
too,
boys. Have a nice one.
Yeah,
Markups incoming.
Yeah, markups incoming. So
my markups,
ready.
I mean, but yeah, also.
No worries, no worries.
Cheers, bro.
Yeah, no worries, man. No worries. Yo.
Nice one, man.
Yeah, I hope they understood.
I'll wait to have dinner right now. You're making markups after dinner.
Man, how was that?
Yeah. I missed like half of it because I was like moving about and shit, but from what I heard, yeah, pretty decent. It's nicely explained.
Oh damn, we had a time to move here.
Was that?
Crazy.
Yeah. Will webinars be recorded? Yes, they will be, my G. I'll answer all this shit and make my markups afterwards.
Yeah, no worries. I'm not gonna do anything. It's like you're cool to answer them, yeah.
Yeah. I'll do that. Cool.
Yeah,
just get your rest, man.
I'm actually waiting to jump on a quick call with Ben Eames too.
Ben Eames.
Yeah, I just want to see what's up. I just want to see how
man.
he's getting on.
Yeah, go for it. I won't be able to join. You guys go for it.
Yeah, it's all good. Yeah, I'm just more of a personal thing rather than anything
personal
else.
thing, yeah. Yeah, it's all good. Yeah. It's good, man. I'm gonna catch you later then. Catch you tomorrow morning.
Yeah.
Let's get that together tomorrow. The beginning, anyways.
Let's get it, man.
Yeah, I'm coming for you. All right, bro. I'll catch you later.
All right, man.